And welcome into Market Talk for this Tuesday, November 23rd. Thank you so much for joining us. I'm your host, Jesse Allen. Find us online, markettalkag.com. That's our home on the web. Markettalkag.com is where you can find us, all of our social media links, and much more. Again, thank you so much for making us part of your day today. As we take a look at the markets, we saw mixed trade. Wheat was higher, strong day for wheat, while corn was up a little bit. Beans were down a little bit. And the livestock market mostly higher, especially that cattle market. We got plenty to discuss here as we bring in our good friend Matt Bennett with agmarket.net joining us today. Matt, good afternoon, sir. It's great to have you back on the show. How are you?
I'm doing great. Excited for Thanksgiving this week. We got a lot to be thankful for as U.S. producers here this year, for sure. I mean, it's a different feel we've got this fall, and kind of battling a cold here, if you can tell. But
Mhm.
it's just been a good week. We've got our son home from college. He goes out to K-State, and so I got some help doing chores this week. So give me a little bit of a respite there.
Well, a little rest to help fight that cold is not a bad thing, that's for
Yeah.
sure, Matt. And we got plenty to talk about. We'll condense it down as best we can so we can help that cold out too.
Yeah.
Looking at this market trade today, wheat was the story. Wheat was the leader. I know. Talk about all the rains in Eastern Australia impacting global wheat supplies. That was one of the big headline news stories. But I think just on top of that, just the fundamentals under this wheat market. We know it's a strong market. It's got a lot of bullish momentum to it. And Chicago KC wheat new contract highs and spot futures again today. Spring wheat higher. Talk about your thoughts with this wheat market here as we wrapped up Tuesday.
I think whenever you start talking about rain in Australia, one thing you got to remember is that everyone was banking on a big crop out of Australia. There's been several years here in recent times that they've just struggled to be able to get a big crop out of there. Issues with drought, a lot of problems with being able to catch rain this year. They had a pretty good weather pattern, talking about having a pretty good crop. And then all of a sudden, whenever it's harvest time, they start catching a bunch of rain. So quality is definitely going to be a concern. I've talked to a lot of people here lately that part of the reason this wheat market's been so ramped up, is that over the last years, a lot of folks that have fed a lot of cheap feed wheat, whether it's been in the Western U.S., whether it's been in China. It's been a very fashionable thing to be able to throw that protein in a ration and be able to keep the ration a little bit cheaper for folks. But guess what? There's no such thing as cheap feed wheat. There's no cheap wheat, period. But you start putting a bunch of rain on a really good crop in Australia, and all of a sudden it's going to be what you would call feed wheat, and it's probably going to be cheaper than what it was. And there's no question that the food grade type wheat's gonna that's a pretty discerning group of people, and they're not going to take the wheat if it's damaged to any degree whatsoever.
Well, we look at Chicago KC wheat, and we're getting over that 850 range in both. We're pushing up towards 875. Do you think $9 wheats is that in the realm of possibility here? Just the way this market's looking.
Looks pretty likely to me at this point. I don't know what's going to slow it down, quite frankly. I mean, yes, at some point you'll probably come in here and you'll see more topping action, and then you just never really know how to pick a top in those situations. But I guess right now I got to think with the momentum that we're seeing, it's going to be pretty tough not to see $9 wheat. I know some people have already floated $10 wheat around. Be cautious there because I always say if you haven't got $9 yet. We probably shouldn't even be talking about $10. But there's no doubt there's underlying support. Whenever you take stocks to use ratio that's been 50% for years and years or more, both domestically and worldwide, and all of a sudden you're looking at a sub 30% here in the US on stocks to use ratio, that changes things significantly. It changes your comfort level. Again, it changes the ability to go out and source cheap feed wheat. There's just a lot of things that it changes. And so there's no question in my mind that this wheat market is pretty stable and pretty strong. One more thing, you get in my part of the world, we didn't get a lot of soft red winter wheat planted compared to what we wanted to. I mean, the thoughts were going to have a huge winter soft red winter wheat seeding, but weather didn't cooperate. Quite frankly, a lot of that wheat doesn't look very good right now. So I'll tell you what, this wheat market doesn't have a lot standing in its way currently.
Well, I know yesterday, Monday, we saw a really strong day throughout the entire grain sector. And today we came in here, soybeans were a little bit lower. I'd have to think that bean meal maybe held soybeans down a little bit today, even though bean oil was up a little bit. It just felt like
Yeah.
there was more momentum to the downside in the meal market. Would you say that, or was there something else holding soybeans down today?
I do think that the bean meal market is definitely something. Whenever it's ramped up so much here over the last couple of weeks and drug the bean market up with it, and you got to say, why did the bean market rally so much? Well, bean meal had a heck of a lot to do with it. Whenever you look at, yeah, the USDA dropped the U.S. crop, kind of threw a lifeline to this soybean crop, going down from 51.5 to 51.2. We all thought it was going to 51.9 or over 52. A lot of folks did, but carryout still went up 20 million bushels. So you went from 320 to 340. It's not like we're running out of soybeans. And so you think, well, maybe there's issues in South America. Well, right now, weather looks pretty good in South America. There's some question marks. Typically, when you're in a La Nina situation, Argentina doesn't have a great bean crop. And so there's a lot of question marks there. But right now, Argentina's got a pretty decent situation going. They haven't even planted all the beans. So I've got to think when the bean mill drags beans higher, and then you're down $7 or $8 one day, you've got to think, boy, it's going to be hard for the bean market to rally. But with that being said, the bean market didn't fall apart today. So I guess you can always kind of hang your hat on that. I can't get super friendly, though, whenever South America looks as good as what they do. I do think the lows are in, for this bean market for some time. But at the same time, do I think we're going to run wildly over $13, like a lot of folks thought previously? I think that you're going to need some added fuel to the fire, and you're going to need to see both products, in my opinion, kind of helping out, or corn and wheat continuing to go higher, because beans are probably going to follow along to a certain extent.
Well, and to that point as well, if quarter wheat continue to go higher, beans are going to follow along. But also, if for some reason beans go higher, corn is going to have to probably follow along as well. We've been hearing a lot about this fight for acres going into next year. And if beans go higher, it seems like corn's got to go with it to try and maintain a little bit of that spread for good prices into next year. And I think that's another
Right.
factor to watch as well, Matt.
Right. That ratio, was getting a lot lower than what we'd seen in quite some time going into the report, uh, November 22 to D's 22. And then the ratios actually worked a little more in the favor of soybeans here over the last, basically since the report. But with that being said, I'll tell you what, whenever you look at, for instance, a 340 carry out with soybeans, and some people, quite frankly, are still calling that for go, maybe to 400 to 500. I don't know that I'm in that camp. I could see a 400 carry out, but you start talking about corn, for corn, a 10% stocks use ratio, relatively speaking, is probably a little tighter than an 8% on soybeans, if we want to be quite frank about it. And so there's no question that you're gonna want to see, in my opinion, the December 22 corn market rally in step, if not better, than November 22 beans. 1.5 carry out on corn right now. I think it gets smaller. Ethanol grind's just been nothing short of phenomenal. And I think that the world exporters have been a little bit laggard in their approach. And I do think they will show up to buy U.S. corn. So I don't know. I'm probably more of a 135 type guy. And so if we get under 1.4, you need to have decent corn acres. And so I'll tell you what, if you would take November beans to $13, I think that you're probably going to see $6 December 22 corn. Now, are you going to see $6 December 22 corn anyway? I think there's a possibility, because I kind of agree with you. The market needs to do a little bit of work here, especially if inputs don't back off. And from what I'm hearing out in the countryside, and from what I'm hearing about from your big fertilizer folks, I'm not hearing that you're going to see a lot of relief before springtime.
Well, you mentioned you think exporters are going to show up to the table for corn. Do you think there's still a chance we could see exporters show up for some soybeans here before the end of the year with a big South American crop on the horizon?
Yeah, I think it's possible, but the problem is that South America's planted that Brazilian crop went in pretty early, and some of those beans are going to be available by the end of the calendar year. And so last year, whereas we knew we was going to get pushed back past the mid-February timeframe when we typically start seeing some of them trickle on the world market, I mean, we're talking 6 weeks earlier this year. And so world buyers are well aware of that. The dollar's screaming. We got to remember that that's going to affect how expensive these beans are out on the world market. So without some sort of a political implication or maybe a goodwill gesture from the Chinese, I'm not sure you're going to see a ton of soybean sales right now.
Well, and as well, you mentioned the dollar screaming higher. We should talk to stocks and crude oil. I know crude oil trading higher today, dollar higher again. A lot of inflation fears once again on Wall Street. A lot of worries there. Talk about these outside markets and just what you're seeing here as we head to Thanksgiving, and how that's affecting our ag space as well.
Well, you want to tap into the Strategic Petroleum Reserve and try to drive down crude oil prices. What's the crude oil market do today? Well, we go up. So I've got to think, as we all know, this has been kind of talked about and whispered about lately. It's got a lot to do with the fact that this crude oil market dipped down below 80 and got into the mid 70s. But bottom line is this: the Strategic Petroleum Reserve is not that robust that it's going to fix any issues for any length of time. And so I'm a little bit concerned, Jesse, that OPEC's going to say, you know what, boys, if you want to play the game, we're going to play the game. And I'm not so sure that we're not going to see $100 crude oil sometime in the next couple 3 months. It scares me a little. I do think that would be hard on our economy, but at the same time, OPEC is it's not the type of group of people I really want to mess with, And so I'm a little bit concerned with how this is all going to play out, but I think time will tell. It's just I don't think that you were going to take crude oil from 80 down to 60 by opening the SPR. People don't understand. If we weren't using any oil at all, it only lasts us like 3 days. Obviously, we've got other supplies we can use, but we're not going to be able to fix any major issues there. So as far as other outside markets, the dollar, I mean, you're at 96.50. That's the highest we've seen in some time. People say it can't keep going, but we're just back in 2020. We're over $100. So you got to be careful in having that assessment. And if you continue to see a strong dollar, there's no question that it's going to be prohibitive towards the commodity market continuing to do what it's done as far as this inflationary environment.
Well, Matt, let's switch gears. Let's talk livestock here before we run out of time today. I think the last time you and I talked was right at the beginning of the cash country and cattle starting to take off, and we've really seen good trade the last couple of weeks, and it's looking like we're holding out for a dollar or two higher once again here this week. Futures were good today. What are your thoughts with this cattle market and the direction that it is heading as we head towards the holiday?
Jesse, I believe the last time I was on here, I said I thought April fats would get to 145, 150. And I
I
said that
think you
on
did.
market to market like 10 days ago, and I got lambasted by a couple of people. And here we are at 143 bucks. Are we going to 145? I'm not trying to pat myself on the back, Jesse, but the thing is this beef demand's been so strong, and then you see, placements have not been close to what they were last year. Now, placements a little bit higher this last week than what they were the previous placements previous month. But at the same time, you got to compare yourself versus last year. So, anybody going out trying to buy feeders, or everybody's trying to buy feeders, there's no doubt that you can't get a deal on them. So, I've got to think that with your numbers where they're at, people still have money in their pocket. We know that people are feeling good about their situations, and so they're going to eat beef. And so I've got to think that these fats will be pretty interesting moving forward. Now, I would say that if you get up towards that $150 level, I mean, at some point you got to ask yourself as a livestock guy, what am I wanting if 150 is not good enough for me, considering where we've come from? So you got to be cautious as to get too bullish at the top of the market because I'm not saying 150 is the top, but 150 is a pretty darn nice price too. And I do think that there's still the opportunity that we'll see that here around the corner.
And over in the hog market, kind of a mixed trade today. Once again, that December contract a little bit lower. It's nearing its expiration. Thoughts on this hog market as we move to Thanksgiving? I know, looking at some of that cold storage report this week as well, maybe adding a little bit of fuel there. But thoughts on the hog market?
Yeah, I mean, it's interesting to me to look at hogs. Your front months. That's going off the board, you're going to be going off in the mid 70s, and then you get out to April and you're looking at $88 hogs. You get out on farther, out to July and you're looking at $98 hogs. And so, it's you've got big carry in the market, pretty healthy market on farther out. I would look at triple digit hogs like I did the last time that we had triple digit hogs, which is probably a sell. So the deferreds, I'd be cautious as to get too friendly on farther out. What are you going to do to get the front months to catch up to the deferreds, or is that possible? I mean, you need big export sales, in my opinion, to see that happen. We haven't seen that happen on a consistent enough basis, in my opinion, to be able to keep hogs at those elevated levels. So if you want to see triple digit hogs top to bottom, you're going to have to see exports pick up significantly.
Well, Matt, great stuff as always. Any final thoughts as we head into Thanksgiving? I know a lot of folks probably thinking tomorrow will be pretty choppy, quiet trade heading into the holiday and then Friday as well. But any thoughts there or any other thoughts you want to reiterate today?
Here's my final thought for you, Jesse. We've got basis that's fantastic throughout the country. You just raised a national record corn crop, it appears, and the market's done nothing but rally over the course of 2 falls. I mean, August of 2020, we were looking at $3.20 corn locally. Right now, we can sell for 6. And guess what? The 20 crop was a half a billion bushel bigger than the 19 crop. The 21 crop was 900 million bushels bigger than the 21 crop, and yet we've rallied $3 since then. And so a producer who's sitting on their hands wondering whether I should sell some $6 corn or not, yes, sell some increments. It's super profitable prices. Can we go higher? We probably can, but at the same time, you can't go broke selling $6 corn in my book. So let's not get too greedy in here. We got a lot to be thankful for. Let's latch on to some of it at the same time.
Great advice as always. And I know if folks need some help with their marketing, they can reach out to you and the team there at agmarket.net, can't they?
Absolutely. Agmarket.net, agmarket.app, either place, good place to get a hold of all of our information.
Matt, appreciate the time. Wish you and your family a happy Thanksgiving, sir, and we'll talk again soon. Thanks so much.
Yeah, absolutely. Thank you.
Matt Bennett with agmarket.net, our guest today here on Market Talk. Find us online, markettalkag.com. That's the Tuesday, November 23rd edition of the show. I'm Jesse Allen. Have a great afternoon.